Over the past 50 years, Islamic banking has garnered immense popularity, fueled by the earnest desire of Muslims worldwide to align with the teachings of Islam and manage their financial affairs in accordance with religious principles. The response has been remarkable, with estimates suggesting that the industry has surpassed the $3 trillion mark, operating in over 20 countries, including Europe and the United States. Despite its widespread recognition and significant success, Islamic banking's footprint closely mirrors traditional banking, which is disheartening for the Muslim community. They find the current system lacking in meeting their desires, aspirations, and expectations. This study aims not to criticize the concept or theory of this virtuous mission but to highlight distortions arising from compromises on crucial points. The economists, bankers, and religious scholars undeniably worked diligently to establish an initial blueprint and necessary framework for Sharia-based systems, and their efforts in this direction are commendable. These banks, in collaboration with some academics, exploited loopholes in founding principles, seeking refuge in controversial Islamic jurisprudence such as Hayal, Masala, and Qiyas. In the last 50 years, Islamic banking has frequently changed its name, from Sharia-based to Sharia-compliant banking and interest-free banking. Presently, it is Sharia-compliant banking with negligible elements of Sharia, relying instead on a self-designed version of controversial Islamic products.
Debt-based products like Marhaba, initially permitted by religious scholars, were expected to phase out after the development of profit and loss sharing products by Islamic banks. Today, over 95% of the credit portfolio in the entire Islamic banking sector comprises debt-based products like Muharaba, diminishing Musharaka, and Jara, leaving little or no space for profit and loss sharing (PLS) products.
To compound the issue, banking regulators have issued directives conflicting directly with Sharia principles. In Pakistan, for instance, regulators have allowed existing conventional banks to either set up a counter in an existing branch or establish a standalone branch for Islamic banking, an odd scenario comparable to having a dedicated room for prayer in a bar or casino. The prohibition of riba in Islam is unequivocal and without ambiguity. Any criticism or interpretation based on untrue evidence in the Quran or Sunnah is misleading, deceptive, and deliberately fabricated to misconstrue facts. The argument for changes in the cultural, financial, and industrial environment of the world does not justify deviation, as similar arguments could apply to other prohibitions like consuming pork, alcohol, gambling, and related vices. With 45 years of experience as a professional commercial banker, including overseeing Islamic banking and obtaining certification and a diploma in Islamic banking, I, like any ordinary Muslim, possess limited religious knowledge. The views expressed stem from first-hand experience, knowledge of this business segment, and extensive study of literature from renowned scholars in the field. I have presented the issues and problems identified during my research, coupled with my banking experience, and invite readers to share their views and suggestions. The path forward towards a true Islamic finance system is not challenging. Technological development and artificial intelligence have simplified even the most difficult problems. However, there are prerequisites for adopting the system in letter and spirit. The foremost condition is a change in mindset, lifestyle, ethical standards, moral values, approach towards life, empathy, compassion for fellow human beings, submission to God's wish, and unwavering faith in the day of resurrection. Without instilling honesty, fairness, equality, justice, and integrity in our daily lives and commercial activities, implementing a true and Sharia-based Islamic banking system remains difficult.